Rachel Jones for Coal Capital Markets. The AUDCAD can provide volatility for traders with a double dose of economic data from Australia and Canada. Australia will see its latest inflation report released ahead of the Asian session, and Wednesday brings the Bank of Canada interest rate meeting. The Canadian dollar has had the upper hand in recent weeks, with the AUDCAD pairing seeing lows near 0.86. If the data supports the Aussie dollar, a move above 0.875 can spark a rebound. The first band of resistance levels for an AUD rally are 0.88 to 0.89. Australia's cost of living is set to worsen before it gets better. Energy prices are expected to surge by 56% and fuel costs will rise by over 10%. The highest level of inflation in 32 years means Australians will suffer with wages until at least 2024, according to the country's Treasurer, Jim Chalmers. He delivered the first budget and said that rising costs would erode pay increases for 2 more years. He says wages are growing faster now than before the election, but that welcome news is tempered by rising electricity prices and grocery bills eating into pay packets. When that inflation moderates, real wages are expected to start growing again in 2024, he said. The increasing inflation numbers could force the Reserve Bank of Australia to act harder on interest rate hikes, which would support the Aussie dollar against its Canadian counterpart. The Tuesday figure for Australian inflation is expected at 7.3% from 6.1%. The RBA once again lifted the interest rate by 25 basis points to 2.85%. And the Bank of Canada is set to deliver a 5th interest rate hike this week, but analysts expect it may be the last due to recession fears. Markets are pricing a 75 basis point hike by the Bank of Canada on Wednesday, increasing its benchmark rate to 4%. The BOC Governor, Tiff McClem, said the bank will continue its tightening policy until it sees clear evidence inflation is returning to 2% target from around 7%. That's the latest from Coal Capital Markets.